afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Nifty and Sensex are back at the day's high. The Nifty trades above the mark of 10,500. Metals and pharma stocks are the big losers in trade. The Bank of England's emergency rate cut helps European equities get off to a positive start, but the gains are subdued as coronavirus fears remain. Stocks in Asia end the day with losses. No takers for Jet Airways as all potential bidders drop out in the race for the grounded airline. A final call on liquidation will be taken after the creditors meet. Good afternoon, Neeraj. Some respite. There is green on the screen, yet it's a volatile session. Nifty gyrated 200 points today again.
Yeah, it's very interesting that we are having this green on the screen despite the US futures not quite doing that. So that's the part that we got to monitor, because the Dow futures is still down about 1.2%. Yes, albeit off the lows of the day, but still in the red. S&P futures about 37 odd points, and Europe though is trading with, as our headline stated as well, with a marginal tick of green. Though keep in mind the CBOE VIX points towards volatility only rising up, but Europe has a strong tinge of green, and that should be aiding sentiment. Pull up the heat map up on the screen and show you what's moving and what's not on the large caps. Well, even Stevens, as far as the gainers and losers go, Gale is down 9% now. This one was that big downgrade that came out today with the presumption that maybe there could be some losses that could come in, as a result of which that stock is down about 9%. Tata Steel, Tata Motors, globally exposed names correcting. And mind you, BPCL, which had a 4% uptick in Monday's trade on the back of that divestment announcement, has lost some of the sheen as well, down about 3.5% in the session. By the way, pharma stocks too are coming off. So pretty interesting. One of the brokerage notes stated that pharma is now becoming the top underperform rating as well, the space at large. So IT and pharma too have corrected today. What's done well? Yes Bank is up 30%. Z bounces back a little bit. Coal India has some gains to itself, and Reliance Industries is giving that big support, 4.5% higher. Presumably, again, a lot of brokerages saying that the stock has corrected so much that maybe there should be a bit of a bounce. Maybe there's a bit of short covering as well that has happened here. So, yep, the upstream names are doing okay. And there are heavyweights like HDFC and ICICI Bank, which are supporting the markets. Though, must say, the HDFC Bank is conspicuous by its absence. Somehow, it's just not featuring in any of the brokerage names, top preferred banking names, despite the fact that it's now sub 3 times price to book. But if large caps have done well, reasonably okay, or well in circumstances like this, how are the broader markets done, Devina?
Well, the broader markets are also pitching in there, but before I go to that, I just quickly look at the India VIX, which, for the last few days had been above 30. And today's session, this is what you've got, another 3% bump up. It actually has come off from the highs of the day. I think it was up about 8% intraday. From there, it's come down, but 31.77. These are still very elevated levels for India VIX. But nonetheless, historically, it's also been a bit toppish. So you've seen a correction. I mean, you've seen a bout of an up move from these levels for the index and for the equity markets, when India VIX typically tops around 30, 35. 35 was when it did it in September itself. Aside from that, the broader market space, like we said, it's a more mixed bag. Mid-cap, small-cap not doing all that much. Individual counters, though, have managed to stay afloat. RBL Bank, which had a brutal session on Monday, was down 22% that day, has recovered a bit of lost ground, so that's up about 8.5%. Varun Beverages, too, had been coming off, and the stock now recovers 4.5%. Edelweiss Financial Services making its approach towards 70. Natco Pharma, PNB Housing Finance, LIC Housing Finance are up in today's session. What's lost out is Future Retail, which is down 14%. Apollo Tyres is down about 8.5%. Indiabulls Ventures, Indiabulls Real Estate, Prestige Estates, all of these real estate names are down and out in today's session, so more pressure coming out there. Small cap index, that's the mid cap 100. Now the small cap index has IRB Infrastructure, which is up at 11.5% higher. Dilip Bilkon, Vakrangi, then you have TV18 Broadcast up 4%. What's losing out is Soba, again from the real estate space, down 10%. Then you have a Raymond, you have Diwan Housing Finance. Finally, the stock starts to look weak after consistently moving up higher. And then you have a Cochin Shipyard, Chennai Petro, which are down about 4.5%. IRCTC too, after 4 or 5 straight days of lower circuit, has finally opened up this morning and is trading with gains. I think last I checked, it was up about 1.4%. But what else is happening within the broader market space, within the futures and options space? Navneet is highlighting that for us. Navneet, good afternoon.
Good afternoon, Davina. While the volatility remains, but the fall that we witnessed in the last 2 weeks now seems like more of a cash-led fall. Pull up the Nifty futures, because remember, with the sharp fall on Monday, we did not see any fresh shorting coming up for Nifty futures as the open interest was just about flat. And the discount is now about 33 points. So from being at a premium of about 10 points on Monday's close, the futures have once again moved into a discount, which may not be a great sign. And remember, so far, every pullback has been used as a shorting opportunity. Let's see if we can sustain the mark of 10,500. Nifty Bank should also come up on your screen, back to being in discount for the futures. But yes, this is the index which has remained more active, 30% higher in terms of OI buildup, indicating there are fresh positions being taken here. India Volatility Index, as Davina was highlighting, 30 is the mark where it usually indicates that the markets have bottomed out. Remains to be seen, because now we are trading above the mark of 30 itself, and 33 has been touched. I think the last high in 2014 was about 37, 38 is something now which the markets will be watching out for. Options data, 10,500 remains a crucial mark, as the 10,500 call has seen fresh riding. But where you're seeing riding for this strike, the 10,500 put is also seeing fresh riding of about 5 lakh shares. Let's see if the bulls can defend this mark or not. But the 10,400 put has definitely seen OI addition so far of about 7.5 lakh shares. Moving on to stock futures, PVR should come up on your screen. There is significant amount of short build-up. The stock's down for the third straight day. Futures will give you an indication in that, as the open interest has moved up by almost 23%. TCS is the other one, which is recovered nearly 3% intraday. This touched actually 52-week low today of 1920, and now the stock's trading somewhere about 1964. Actually, it's come off again. 1980 was the mark which it touched, but there is significant build-up on the futures side, indicating positions are being taken here. And we've been talking about GAIL after the downgrade from Credit Suisse. It's fallen 9%, and futures are indicating fresh short positions for this one. It's also your top Nifty loser.
All right, GAIL there in focus, and we've got the move on the downside also coming on the back of some brokerage notes. Amar Singh, Head Advisory at Angel Broking, is joining us right now on the show. Along with him, Manav Chopra of Indiabulls Ventures is also here with us. They're going to join us in the technicals front. We'll have Mahesh Joshi joining us in just a few moments. But let's start off this conversation with a quick call on the Nifty. We're taking support at 10,500 now. Amar, what would the call be in terms of whether or not we can go long from these levels?
Yeah, looking at Nifty, technically, if you look at the charts with the short-term or the intermediate term trend, clearly shows that there is weakness and the trend remains down. But the level that is on Monday's low, that's something which is very crucial for Nifty, because if you look at it, support comes for Nifty around Nifty futures somewhere around 10,000, 10,330, and so I would say that that's the reason we are seeing this pullback. But Nifty, if you look at the charts, what it says is that somewhere on the upside, 10,550, 10,600 levels, that's going to act as a resistance level. We are going to see increased volatility. Around those levels, we'll witness selling pressure on the downside, because this is a very crucial support. And also, if we look at other global indices charts, technically, they are also at very crucial support zones. So that's the reason we are seeing this sort of volatility and strong support around the levels.
Okay. What about you, Manav Chopra? A quick call on the Nifty as well as the Nifty Bank, which has been a clear underperformer.
Yes, in fact, the markets have already seen a series of decline, and looking at the current structure, definitely the structure is quite weak, but the odds favor for a bounce from the current level is quite high. We have already seen today markets trying to form a higher base on the intraday charts, and there has been a strong reversal formation observed on the 60 minutes. And also out of the money put writing, which is indicating that the bulls are now trying to at least defend some important support zone. Even at the current zone, since there has been too much of volatility, I sense at least in the near term, once the Nifty starts exceeding, and likely if it crosses 10,550, you would see some sort of a short covering rally, and that could take the markets a little higher towards 10,750. For Bank Nifty on the upside, 26,700 to 26,800 would be the important crucial levels. One can start taking long positions in the Bank Nifty Once if it exceeds 26,700 on the closing basis, it's then we can expect a short-term pullback rally coming across the Indian equities. I believe that at the current levels, the risk-reward ratio for going longs are quite favorable than going shorts.
Okay. So then let's talk about individual stocks as well, Manav. What would the call be there? While the index, you may have your view, but the individual stocks may still have some value.
Yes, my first call is buy on Britannia. In fact, in this market, looking at the volatility, it's better to have a defensive bellwether stock which is also forming a strong bottom. The stock has observed a very strong reversal formation near its long-term averages and has formed a piercing candlestick pattern, which suggests that at least for the near term, the short-term bottom is in place, and also on the intraday there is a double bottom. So I believe in the near term this stock could see a short-term momentum rally on the upside. It's a buy with a stop loss of 2950 for an upside target of 3180. The other stock would be a sell. In fact, JSW Steel has in fact witnessed amount of series of declines. So for a short-term trading opportunity, in case of the stock continues to see selling pressure at the levels of 225, 230, one can maintain a sell into this with a stop above 230 for lower targets of 205.
Okay, so those are some individual stock ideas coming in from Manav with a sell on JSW Steel. Amar Singh, what about you? Which are the stocks you're laying your bets on this afternoon?
Yeah, I would say the first stock is again from the consumption space, and that's Hindustan Unilever. If you look at this stock, the stock has corrected, but the correction has been I would say marginal, and there's been a pullback today. And technically, if you look at the charts on the long-term charts or the intermediate-term trend, Hindustan Unilever continues to remain strong and positive. So this is one stock one can look at. So any dip in this stock towards 2135, 2140 ideally can be used as a buying opportunity with a stop loss of 2048 and a target of 2280 on the upside. And the second stock to look at is on the sell side, and that is a sell on DLF. What we are seeing in DLF is that DLF continues to grind lower, and technically from a short-term, intermediate-term trend, we are seeing that the bearishness still persists. So any pullback in this stock towards 180 to 183 levels can be used as a shorting opportunity with a stop loss of 193 and a target of 168 on the downside.
Okay, so those are some individual stock strategies that you should keep your from our technical experts, by the way, for this afternoon. But one stock which has clearly bucked the trend, even in a weak environment. Of course, today we are up, but I'm talking about the last 1 or 2 weeks, is Pidilite. Pull up that stock. It's touched fresh highs in today's trade. Of course, there was some bit of weakness on Monday as the entire market was down, but Pidilite is up about 3.2%. The future should also come up on your screen, which will tell you it's only about cash-based buying, or the traders are also taking a bet on the long side. 21% higher. Even at these live high levels, probably people are betting on the long side. Manav, what do you do here? There are a few stocks which are still outperforming, something like Pidilite, of course, good quality stock, expensive on fundamental side, but technically on the charts, what levels do you monitor?
See, the prices are in a very good structured uptrend, and like you mentioned, the complete good outperformance. This definitely defines the quality of the trend, and in such a situation, this stock also acting as a bellwether. On the lower side, the important support would be at 1630 to 1625, which is close to its today's lows and Friday's lows. So that could act as an important pivot point. So anybody initiating long positions and also already holding long positions, 1625 should be a trail stop loss. I believe since the stock is in a strong upside momentum, we could see series of up move going forward. So on the immediate basis, 1765 to 1800 could be the next upside target we are looking at.
Okay, watch out for Pidilite as well in the session. We are just looking at the kind of moves that have happened. We've seen the last 2 or 3 days, anything which is in perception or otherwise likely to gain has still held out, the likes of Yes Bank, Vodafone Idea. But some scare about possible earnings issues due to the crude price fall or coronavirus, and the stock market is sticking to the cleaners. GAIL is a prime example, is the top loser today on the Nifty at about 91 rupees, is down about 9%. Now, viewers would remember in the morning we spoke about what brokerages are saying when it comes to GAIL, and the belief that Morgan Stanley has was that or is that there is a danger to nearly $500 million worth of LNG contracts that the company has signed from the US companies, and there could be those potential losses which could hit GAIL, and they cut their target price from whatever it was, 150, 160, whatever it may have been, that's irrelevant, to 88 rupees. Now, as a result of that, GAIL has come off quite materially. I mean, 1 month chart is fine, but in today's session, it's come off 9% after a 7% fall in Monday's trade. That shows you the extent of fear that markets have around companies which might have possible issues, either due to coronavirus or due to fall in crude and crude-related impact as well. So this one is down about 9%. And mind you, this is not it. There are a clutch of other names which, because of these sharp gyrations, have corrected and reacted very, very significantly in the last couple of days, either to crude price fall or otherwise.
Makes you want to think now that, now we've already got one Nifty rejig where Yes Bank is going out at the end of the month. Because of this correction, there have been a number of other Nifty 50 companies that have had it to the chin. Probably may land up seeing the next cycle of Nifty rejig having one more name that goes out of the index and a replacement of that coming in. But the coronavirus fallout could not have come at a worse time, says Old Bridge Capital co-founder Kenneth Andrade. The veteran portfolio manager says that it doesn't take away from the fact that there are still some companies that are worth investing in. Listen.
So near term, they are second guessing, and it's happening because the experiences say so. So, if you hit the ground and you speak to a number of smaller businesses that are there, there is an inventory issue, and there is a payment cycle which is extending itself. And that's going to be a little expensive in the near term. So yes, practically there are challenges that are there in the system. It works this way, that if there's a small component of your machinery that comes in from China, your entire working capital cycle is locked up just because of that small component. So I guess everyone's reacting to this, to the environment. So there are near-term challenges, and it will be a little expensive navigating through it. But I don't think it's going to be such a long. It's not going to be perpetual in nature.
Yeah, I agree. But I'm just trying to figure out, Kenneth, and since you started off with this business thing, let's go that, and then we'll probably move on to how you're looking at the globe. All the conversations that we had with companies in the month of February, everybody suggested that we have inventory till March, early April, and then if the situation worsens, then we don't know. But the point is that while China might be limping back to normalcy, it is spreading at an alarming pace across the world, in the US as well. We've seen increased cases in China. Therefore, it's not a financial response that we can give to this, right? We don't quite know what the extent of damage would be. Would that be a fair assumption?
Yes. We definitely know what. We definitely don't know as to how this will emerge in the medium term. So today you have supply side issues, tomorrow you'll have demand side issues. Because it's moved from the supplier to where the demand actually is. So none of us know as to how it will evolve itself. One thing that we need to take for granted is that it's going to be expensive navigating through this cycle. And we probably will not go back to the way business is done in the past.
But not perpetuity in the near term.
It's not perpetual. I hope it's not perpetual.
Yeah, but again, okay, you hope it is not perpetual. What's the second order effect of this, Kenneth? One is that companies will probably have to let go of some bit of demand if there is demand and they can't meet supply, and that is an imponderable. But I heard you mention that it's going to be expensive to navigate to this. This is because companies will have to arrange for alternate sources of back-end supplies, so on and so forth, or manpower issues, or a mixture of everything, including higher cost of credit as well. In a falling interest rate environment. What is it?
One is payment cycle is going to get delayed. Your inventory cycle right now is high. It will get higher as you have to restock and make sure that these contingencies don't evolve. Your credit cycle has to come back to normal, and this has come at a time, especially for corporates in India, when the bottom end of corporate India has been struggling with higher working capital requirement and also struggling with higher interest rates. Okay, this has come at that particular juncture at time. So the timing of this probably is not perfect.
Well, in a big political development, after serving the Congress party for 18 years, Jyotiraditya Scindia has decided to move on to the BJP with a formal announcement which is expected anytime now. A letter to Congress President Sonia Gandhi, Scindia said that he was unable to serve the state of Madhya Pradesh and the country while still a part of the Congress. Well, remains to be seen what happens now in the state of Madhya Pradesh, whether the current government gets toppled or not, with him leaving, and also with him there are 21 to 22 MLAs who have already resigned. We'll get you more details on that development as and when they're announced. As you can see on your screen, they will be briefing the media in a while. All right, just shifting focus to markets. I think we're maintaining the gains. Nifty still holding the mark of 10,500. We're at 10,515 right now. It's a gain of almost 65 points that you're seeing. And Nifty Bank is up about 100 points in trade. We've got Mayuresh Joshi, Head of Equity Research India at William O'Neill, who joins us right now. Mayuresh, good afternoon. In your recent report, you've highlighted there are 3 C's which have spooked the markets. What's the assessment at current levels? Have we bottomed out? Do you see any fresh opportunities? The worries around crude, coronavirus, credit risk due to what's happening with Yes Bank, is everything priced in?
Good afternoon, Navneet. No, I think those 3 C's still are playing a very dominant role in terms of the volatility that the markets are exhibiting. So yes, I think there is some hope in terms of the Chinese president actually visiting Wuhan. So I think there is some element that the cases in China and South Korea that are probably getting reported have eased out. But there is pain in the rest of the world. Look at Italy, look at the number of cases on the rise. So I think the number of cases will keep on going higher. And as containment happens over the next few weeks, as and when that starts happening, I think there will be some respite for the markets. To offset the economic impact, obviously we've been hearing a lot more in terms of what is being done at this point of time. Bank of Japan, already 500 billion odd yen that have probably got infused into the system. The Chinese have already infused around 800 billion odd yuan. That's almost 0.8% of the GDP, which they've probably done at this point of time. Trump has got a mandate of almost 8.3 billion odd dollars at his behest. And what probably happens in terms of coordinated stimuli action, along with expectations of tax cuts as Trump was discussing, I think that can create some amount of relief for the equity markets as a whole. But when and how do they come through is going to be extremely important. The credit risk aversion, specifically in terms of Yes Bank, and what probably happens for the banking system as a whole, with 81 bonds actually expected to get written off. But there is some hope in terms of some respite on that front. But what kind of equity gets pumped in, and so State Bank has promised a minimum of 2,500 crores. What actually happens in the aftermath, specifically for bondholders, I think is going to be extremely critical for the system as a whole. So I think putting all those 3 pieces together, I think there is every hope that there will be some solution found, at least at the economic end as we are seeing it, something on the credit risk aversion as the bank and the regulators, along with the government, have swung into action, and some hope that Russia probably will come through. Looking at the fall that crude has probably given over the past couple of days, which probably affects cash flows and impairments for all the producers of crude at this point of time, including shale producers of the US. So volatile times. We'll wait for 3 days, as I mentioned earlier, of some sanity and upswing into the market. If those 3-4 days are consistently achieved, we'll probably get
okay. All right. Interesting. We'd spoken to Atul Suri also some time back, and he was also of the opinion that at least, the number that's worked for him is 3. So if you see 3 straight days of the market consolidating or the market showing a slightly upward bias, that's the time that you can start digesting the fact that you could have made a bottom. But talking about bottoms, it seems that Yes Bank made that on Friday last. Since then, the stock's been up about 60% in a matter of 2 trading sessions. Amar Singh, if you've tracked the build up as well as how the stock has moved, massive price action in the stock. From a pure trading perspective, would you go long now?
No, I wouldn't go long at the current levels, because if you look at the stock technically, the stock has got resistance around 29-30 odd levels, and so there is a possibility that we could witness some profit booking around those levels. And what the stock has been displaying is that on the weekly charts, the stock definitely seems to have formed a bottom, and the day when the stock had witnessed almost close to 5.65 levels. So that shows that yes, that was a spike. So I would suggest that those who are long, they should definitely look at booking profits around 29-30 odd levels, because that's a first level of resistance for the stock. If it takes out that level, then the stock could rally towards 35, 36 odd levels. But I would say that this stock is more prone to news and development, so one needs to be really cautious in this stock.
28%, and it's 28 rupees. So you have to admit that forget the day when the announcement was not made, which is Friday. On Monday, the stock opened up and was trading at about 17 rupees for a really long period of time, and then started the rally upwards. So for anybody who believed that he can map the entire piece.
That's when details of how much SBI is likely to pay and how much.
Which came out over the weekend, right?
Yeah,
which came out of the weekend. But on Monday itself, after the 16 rupees uptick also on Friday, Monday it was trading at 17.5, 18 odd rupees. And from there, it's rallied quite a bit. So there is some informed buying that's happened here. But please be very careful when you're trading this one, because you never know how it will shape up. But the piece that I want to talk about, Mayuresh, is what's happening to some of the other aviation companies as well. We're talking about crude price fall, companies getting impacted due to that negatively. Is there a positive effect that you reckon could come in for Interglobe and a SpiceJet, or would you reckon because of the flight cancellations, etc., the load factors anyways won't be high?
Well, afternoon, Neeraj. I think all these factors will keep on playing out, right? So I think load factor is expected to be very, very volatile in times like this. What we've also been reading across a lot of media publications is that a lot of airlines are actually doing ghost flights just to probably ensure that their airline slots at a lot of airports probably don't go wasted. The third element obviously is that with ATF or crude prices coming up, obviously that aids the overall input cost, but with the load factors expected to remain extremely soft, I think the entire perspective in terms of how revenue generation will happen, specifically in terms of interest payments that still are expected to go through quarter after quarter, will definitely hurt their cash flows. So I think let's wait and watch, Neeraj. I think there's no point in probably preempting when all this will probably get over. When it does get over, however, I think the V-shaped recovery that we're probably talking about in terms of flights moving at full throttle with full load factors, I think that is a given. That has happened in the past as well with previous outbreaks. But let's not preempt this at this point of time. I think let all the containment probably still go through. So I think just wait and watch for aviation stocks at this point.
Okay. Since we're on the topic of aviation, then Jet Airways has failed to find any takers after 3 rounds of bidding conducted by State Bank of India-led committee of creditors. Vishwanathan Nair joins us now for more details. Vishi, what have you been gathering?
So what we understand from sources who are part of this entire process is that essentially, even after those 3 rounds, there have been actually no bidders who have submitted a final bid for Jet Airways. 2 of these bidders, one is a Russian investor and the other is Prudent ARC, which is an India-based asset reconstruction company. Both these bidders had shown initial interest, but then eventually withdrew from the process and decided that they will not participate any further. Now, Synergy Group, which is the only bidder that has been there as part of the entire bidding process since the beginning of Jet Airways' insolvency proceedings, even they have been putting up certain conditionalities. Essentially, they want preferred slots at many international airports, which the lenders under their power cannot provide. So that exactly is the reason why Synergy Group is also not submitting a final bid. Now, what we understand is that on Thursday, that is tomorrow, we will have a committee of creditors meeting for Jet Airways, where there will be a decision taken on whether they should progress, whether they should close the entire bidding process and then move on with liquidating the company. If that happens, then this is a major hit for not only India's banks, but also the aviation sector, because remember, the Jet Airways was grounded last year in April, and since then there have been constant sort of reassurances that have come from bankers as well as the government, saying that they're trying to revive the airline. That clearly has not worked out well in favor. It is possible that even after the company goes into liquidation, there could be another round of bidding to sell the company as a going concern. The IBC provides for that as a measurement. But of course, all of those things will become clearer in the next few days.
Okay. Vishi, thanks so much. And you would probably blame a lot of current factors as well, likely on this development, but that's Jet Airways for you, and that's of course the entire aviation pack dissection for you. Half an hour left for trade to end, and let's just quickly revisit what the equity markets are doing. About 0.5% up for the Nifty and the Sensex, Nifty and the Bank Nifty. The Sensex is up about 0.75%, and mind you, the one that is pushing it along has to be Reliance Industries. You have to keep that stock at the back of your mind. 4.5% higher for that one. Really strong show. Now, let me just revisit the notes that came in from Macquarie this morning, for example. In their note, they mentioned that there is an outside chance that the consensus earnings estimates might come down by about 18%, but they believe that the current correction, which we have witnessed in Reliance Industries, bakes into account the negatives, and therefore, while they haven't changed the target price, they're willing to go out and give an accumulate rating, if I'm not wrong, on Reliance. This is what they're saying. They've downgraded the stock to underperform. They've cut the target price as well, but they believe that the correction has been fairly steep, and maybe some of the pain could be in the price. They're removing the deal premium from Aramco, one of the few brokerages which has gone out and said that. And the upgrade is because of the sharp drop in the target price as well. Mayuresh Joshi, at 1163, does Reliance Industries give you a chance to invest large money in, or would you, even if you're convinced about the Reliance story, you would stagger out your purchases?
Well, I'd still wait it out, Neeraj. I think a couple of reasons for that. One, obviously, I think the concerns related to the crude fall and so on and so forth. I think what kind of implications that have in terms of the core business valuations and the business prospect as well is to be seen. Though Reliance has multiple options in terms of feedstock procurement, the GRMs will be definitely better than what the reported GRMs will be. Again, I think the middle distillate portfolio bails them out. The second element obviously is their consumer-facing businesses, which is telecom and retail. And they've been holding up pretty well, specifically the retail piece for Reliance, at least till this point of time. What probably happens with the telecom piece in terms of the debt repayment, the pre-tariffs and the post-tariffs have probably gone higher. So the ARPU improvement should be visible over the next few quarters. And again, the expectations largely in terms of servicing specifically of the telecom vertical on the core EBITDA levels as well for the telecom piece itself. So there are a lot of moving parts for Reliance at this point of time, but I'll better wait out for numbers and then probably take a call. Till that point of time, I think anybody holding on, yes, they can hold on, but fresh buying, I think I'll just wait out till the numbers come.
Okay, not recommending fresh buying into Reliance Industries, but if you've already bought the stock, continue holding is something Mayuresh is advising. Remember, lower crude prices are not good for upstream companies like Reliance Industries. 11:58. Let's quickly get a technical check also. Manav, it rebounded from its 52-week low levels, which were seen on Monday. How do you read the recovery today? Do you take any position?
Yes, in fact, the stock is near its important lows on the weekly and the monthly charts. It's near its August 2019 lows. And in the past, when the Reliance had declined, this was the level where it started to form a base and eventually move higher. At the current levels, there could be an odd bounce towards the levels of 1200, 1220, which cannot be ruled out. But only a medium-term structural change in Reliance would happen if it closes above 1220. So only playing for a short-term trading opportunity, yes, one can definitely go long at the current zone. The stop loss can be placed at near the lows of today, but on the upside, we are looking only for the levels of 1200 to 1220.
That's Reliance Industries for you. The other stock which has remained weak throughout the session is Apollo Tyres. Pull up that one. It's corrected quite sharply after seeing cuts of about 6% on Monday's session. So today it's down another 8 to 9%. It's at day's low, and there were some reports, I think globally the plants which they have, they've announced some job cuts due to coronavirus issue. But Mayuresh, what do you do with these tire stocks? Because crude prices falling is actually a positive for them, but Apollo Tyres is down about 8 to 9%. How do you approach this one?
No, absolutely, you're right. I think crude prices falling, crude derivatives and RSS core prices, which is the core for rubber and tire which is the basic ingredient for rubber making and the basic input for tire companies, obviously has seen some amount of its sheen going off, which basically means that they should probably have better EBITDA margins. But the replacement market is something that holds up their business. The OEM market is still extremely weak. For a few of these companies which are export-oriented and export-facing as well, specifically with Apollo having plants in the European region as well. The kind of fears that one is going through at that point of time. I think that definitely will have some amount of leeway in terms of how the reported numbers for the overseas operation will turn out to be, along with weak OEM realizations as well. So yeah, input costs probably on the positive side for these companies. But again, I think the overall factors are not aiding the overall revenue growth, which will hamper earnings and cash flows as well. So again, I think largely it's a wait and watch market now at this point of time.
All right, that's a view coming in. The other angle that most have started to look at has been the spread between the earnings yield as well as the treasury yield. Now, this is I just want to present a chart to you that has been put out by ICICI Securities, and it looks at the last few instances where you've got demonetization, you've got the taper tantrum, and now you've got COVID-19, and there has been a positive differential between the Nifty 50 earnings yield as well as the bond yields, the 10-year bond yields. And every time that has happened, the next 1 year has been a positive year. And as you can see, 1 year post crossing this region in the year 2012, 2013, this was taper tantrum. There was a 44 basis point differential between the earnings yield as well as the 10-year yield. And post that, the 1-year returns was 20%. During demonetization, a 44% positive differential between the Nifty earnings yield as well as the 10-year yield. And post demon, the period, 25% 1-year return. COVID-19, the start of the month itself, around in the first week of March itself, breached these levels, a 45 basis point differential, and this would have probably widened now. It's already touched that, and you seem to wonder whether or not this can get as bad. But remember, during the global financial crisis, this differential actually widened to 500 basis points. But that's because the entire system went into recession. It may not be the similar case right now because there are a lot of preemptive measures that have been taken, and therefore it makes you believe also the fact that the price to earnings multiples are at trough levels now for the Nifty 50. It's at a 15-year average of about 15.4 times, considering that we came up from levels of 18.6 times. So many factors put together probably suggesting that this could be a little overdone, but you still don't know. If things get deeper and worse with regards to the virus, this could actually widen further. But history has suggested in the last few occasions that post this differential coming to around 44, 45 basis points, it's actually seen returns for the markets coming back in. But coming back to the markets, Mayuresh, just want your view on this, and if at all you do have the sense of the earnings differential versus the 10-year yield differential, and what do you make out of this?
No, absolutely. I was reading a few reports as well, and it does make sense in terms of the historic precedents that these data points have thrown up. And yes, I think if you probably look at history as well, the next few weeks, maybe the next few months, the pain might continue. But again, I think with the expectations of global stimuli action expected to come through, as I mentioned earlier as well, a lot of the Chinese central bankers, the Southeast Asian central bankers have already swung into action, G7 coming in, US coming in. I think the economic offset in terms of the probable downside in terms of the economic risk probably taken care of. So yes, I think global GDP might have its sheen taken off for this quarter, but again, I think there'll be a strong rebound. So I think there is every hope to believe that as markets start rebounding, there will be a significant amount of opportunities that will be available for the market. So I think it's the patience that pays off for long-term investors. So I think let's wait it out. There will be plenty of opportunities, in my opinion, in the next few weeks. Leadership positions, stocks have actually cracked from top levels. So I think there'll be brilliant opportunities over the next few weeks. And yes, I totally subscribe. I think with the yield differential coming through, I think the next 1.5 year, albeit the next 2 months being a little bit soft or weak in terms of reported numbers, should be pretty good for leader positions that a few of the stocks can take in respective sectors.
Okay. Just want to mark few stocks. By the way, we are once again off the day's high, so 10,470. Remember, all the pullbacks so far that we've seen has been used as a shorting opportunity, and this time around as well, Nifty is now turned flat, 10,468 on Nifty. But there are a few stocks which are moving around. Pull up Dilip Bilcon. It's at day's high. I think it's locked in upper circuit now with gains of 19 to 20%. Yeah, but it's locked in upper circuit. And you've also got something like IRB Infra, which is up and about 12% gains coming in for this one, and Shipping Corporation of India has also surged about 10%. Manav, I'm not too sure if you track these stocks, but Dilip Bilcon, IRB Infra on the charts, the gains that we've seen, would you recommend buying into these stocks?
Looking at the chart for Aviation, yes, the prices have already witnessed a series of decline, but currently I don't see any bottom formation. Since the prices have already witnessed a sharp move, at least on the intraday basis, I believe one should at least wait and watch for some more confirmation. The important support for IRB now would on the lower side would be at the levels of 65 to 70. So we will have to see if the prices now eventually starts breaking above the levels of 80. But if I have to play a move into this, I believe only a close above 80 would see a short-term move towards the levels of 85. But at the current levels, I think it's a no trade zone, as it's still we need some more confirmation at least into this.
Okay, a couple of these beaten down counters are seeing some rebound in today's session. Mayuresh, it's becoming really difficult to pick up stocks on basis of valuation, considering the way markets have fallen. We've corrected, by the way, nearly 15% from top. In a scenario like this, would you then focus on good dividend paying stocks? For example, Coal India has a meeting tomorrow where they will be considering dividend. Of course, if you look at the valuations, it's trading below its historical averages and also below its issue price, I believe. Do you then look at these stocks, or no, you would still stick to quality stocks even in a scenario like this, and wouldn't mind paying a premium for something like Pidilite or HUL?
No, so I think staying with quality and staying with leaders within respective spaces still makes sense. I think for all the companies that you probably mentioned within the PSU baskets itself, which are high dividend yield paying companies as well, I think the core business model is going through a massive transformation at this point of time. So when you're expected to see core earnings not picking up significantly, and that itself relates into lesser cash on their books, which has been the case with a few of the high dividend yielding companies as well. And again, uncertainty in terms of the business outlook itself for the next 3 to 4 years, both in terms of top line growth, which probably seeps through on the EBITDA or the operating front, and subsequently on bottom line. I think the ability to probably pay dividends consistently at previous rates also probably becomes a huge question mark. So there's no doubt, I think these companies do pay good amount of dividend at this point of time. But again, just solely going with the factor of having dividends come to you when the core businesses are expected to probably just be a little bit soft, I think I'll still prefer creating a watch list, which is leaders outside spaces like consumption, specialty chemicals. I think I'd still stay with the thesis that we probably own at this point.
Okay. Well, stay on, gentlemen. Let's find out what's made it to Sharad's list of the Fab 4 stocks of the day. Johnson right now with that. Sharad flattened out completely for the markets, but there are stocks that I'm sure are standing out and doing fabulously well.
Well, yes, Neeraj, two stocks from the banking space have actually made it to the list. The first one being RBL Bank. The stock is up more than 8%, seeing its biggest intraday move in almost 4 months after management clarified in a press release stating that the rumors regarding the financial stability and the health of the bank itself is not misplaced. So there's actually been no adverse change, in the asset quality, and the guidance of the management remains same. And the capital adequacy ratio stands at almost 16.08%, with Tier 1 capital standing at almost 15%. Up next is Reliance Industries, which is up more than 3% after we have seen a fresh long seen with a high open interest of 21% and the volumes trading at almost 3 times its 20-day average. And the next stock we see is Lakshmi Vilas Bank, which is up almost 4.7% after Economic Times reported in its release that the bank plans to raise almost $250 to $300 million from overseas investors via sale of 49 to 60% stake in the bank. And the next stock is the IRB Infra, is up almost 12.2% after it has snapped its 3-day losing streak, and it also is the biggest gain in the Nifty Small Cap 150 index. Back to you.
Right. Thanks a lot for that, Sharad. Those are the Fab 4 stocks of the day. Two stocks in the index which have a positive 7-day close, positive monthly close, positive 3-month close, positive 6-month close. And no points for guessing. Asian Paints is one of them. And then you have Nestle India, which is withered this turbulent ride so far, completely unscathed. A quick chart check first, and then I'll go to Mayuresh. But Manav, Nestle and Asian Paints.
See, looking at the chart for Nestle, yes, the stock has been in a sideways trading band. In spite of this volatility, it is still in a consolidation zone. We haven't seen any price correction to this, but on the lower side, 15,700 to 750 would be the important support clusters. I believe the stock would witness some sort of a time correction, at least for the near term, and I don't see any strong momentum rally coming into this. But given a choice, if the stock declines, sees any decline towards its medium term average, it's definitely a buy on dips approach. Asian Paints, on the other hand, did witness a breakout on the charts last week, and it is still maintaining its important support zone. It is still forming a series of high tops and bottoms. So it's looking at, for a short-term perspective, the stock can be bought with a stop loss of 1845 on the lower side, and once if the stock closes above 1900, we could expect higher targets of 1950 to 1975.
Okay, Mayuresh, what's your take on making some investments in counters like Asian Paints, Britannia, Nestle, Avenue Supermarts?
So Asian Paints, HUL do remain on our watch list, right? Again, I think the numbers are justifying that. So when you probably look at a simple comparison between Asian and Berger, right? Berger is trading at a premium to Asian Paints. So Asian has a huge leadership position in the decorative segment. Largely, again, I think it's propelled into emulsions and putty, because I think that's where the growth is at this point of time. But large element of that itself is flowing through capacity expansions, and that will throw through into terms of earnings and top line growing at a very reasonable pace as well. So yeah, Asian Paints probably remains on our watch list as well at this point of time, along with HUL, because I think the performance that HUL has meted out, EBITDA growth of 18% consistently over the past few quarters. The merger is definitely going to aid earnings perspective going forward. The innovations that they're probably bringing on table, and the expectations of the wellness segment actually doing well, with a lot of sanitizers and hand soaps probably being sold off at this point of time. I think that should also hold up the EBIT margins for them as well. So yeah, I think if I have to put two stocks from the consumption basket on our canceling methodology, I think Asian Paints and HUL will fall into that.
Okay, the other set of stocks that you should monitor is what's happening to all of these which get impacted from gatherings not being right up there. So watch out for Inox and PVR. There is merit in trying to assess the impact on those businesses, and we'll talk about them. Delta Corp has been consistently losing out, and both travel as well as people not wanting to be in a closed space like a casino might be impacting this stock, because it's down another 5%, so 114 and counting. This one continues to see no end to the selling, so that's part two. And then of course we've spoken about what the aviation stocks could go through already, both on the charts and fundamentally. Manav Chopra, I'll come to you first on the charts. For an Inox and a PVR, what levels do the technicals suggest?
See, Inox in fact has already seen a sharp decline from its recent peak of 500. It's now near its long-term averages and trying to consolidate around the levels of 350 to 360 odd. I believe we'll have to give this, both these stocks have witnessed a very sharp decline at least, and has definitely dampened the medium-term structure. The long-term structure still remains bullish, but there could be some odd bounce. But I sense both the stocks, PVR and Inox, would take some more time to at least consolidate and form a higher base. If I have to pick one purely on the risk reward, Inox Leisure definitely is quite well placed. I sense on the lower side 340 to 360 is a very crucial band, and on the immediate basis I don't see the stock go below 340. So for a risk reward basis and for a short term trading bounce, I think Inox could definitely play out quite well. We could see a short term bounce towards the levels of 400 to 410.
Manav, fundamentally, is there merit in trying, Mayuresh, fundamentally, is there merit in trying to own an Inox or a PVR at the current valuations?
So it will make sense, but I think all the hula that is probably happening in terms of what might happen if crowd gatherings get banned, and what you've probably seen in the south, in the state of Kerala, for example, I think that does put a dampener in terms of all these exhibition players as well. Again, very, very interestingly, PVR in terms of South India has an exposure is 34% compared to Inox at 22%, which is far more diversified in terms of the geographical presence. But yeah, I think this factor will keep on hinging as an overhang for all these stocks. So let's hope that the virus does not probably spread, and if that does not spread and the containment has happened, I think these stocks might show huge bounce back if no such measures are probably taken, but you never really know, Neeraj. So I think, as I always said, and I've always maintained this for the last 2 to 3 weeks, I think it's better that you put yourself in a wait and watch mode and not rush into it. The valuations have definitely cooled off from the peak for Inox compared to PVR, but let's wait out because you never really know what kind of developments might actually happen.
Okay, those are the exhibitors. And by the way, Kerala has announced that all the theatres and also schools will be shut until March 31st due to coronavirus outbreak. Okay, just 10 minutes to go for markets to shut shop. So let's get you some closing strategies from our technical experts. Manav, coming to you, any STVT or any BTST for tomorrow's trade?
I have a BTST. It will be a buy on HDFC Bank. In fact, the stock has shown some good amount of base building, at least on the intraday chart, and has breached its important levels. For the near-term perspective, 1100 would act as a very important support, and if these levels hold on, this could be one stock which could actually help Bank Nifty to also come out of its short-term resistance zone. So on the immediate basis, a stop loss of 1100 on the low side can be placed and expect an upside target of 1140 to 1165.
Remember, HDFC Bank is at day's high. There was a bulk deal which just took place, I think, 5 or 10 minutes back, as this is what Bloomberg Terminal tells me. And from those lower levels now, the stock's at the highest point of the day. But Nifty is once again just about flat, 10,040. Amar Singh, your closing strategy?
Yeah, I would say one can look at ICICI Bank because ICICI Bank is also trading very close to its crucial support zone, and there is a possibility that the stock could pull back towards 475, 480 odd levels. So ICICI Bank is one stock one can definitely look at from a short-term trading perspective.
Okay, so those are two trading ideas for you. Reliance is still sustaining the gains, I guess. Though it's off the day's high, up 3%. You've got Yes Bank, which is up 35%. Z, after falling below the mark of 200, I think it's back above that mark. There is some rebound which is coming in Z as well, which is up about 8%. That's contributing to Nifty Media Index as well. Mayuresh, I want to focus on the insurance space because this was a space which, at least until last year, a lot of people were interested in. Reason being the sector being underpenetrated, fewer players. The sort of correction that we've seen, would you bet on any of the insurance players now at current levels? Do you see good reward versus risk?
There would be, Navneet, over a longer medium to longer period of time. And again, I think the argument has not probably died out, right? Because underpenetration still remains very, very starkly there. So largely, again, I think the new tax norms which have come through, I think the fear which is playing out at this point of time, specifically for the bracket below 7.5 to 10 lakhs, whether they opt for insurance policies or not, is something to be seen, and that will be very, very interesting in these quarters numbers as well. The second element, obviously, is the product positioning that all the insurance players need to probably do and project themselves as lifesavers and not tax savers to a certain extent. The third element, obviously, is the product mix that these players themselves have, and I think they are moving towards a better product mix for all those players, specifically on the protection side. And that is exhibited very, very clearly from the VNB business and the VNB margins as well. So there is huge potential. There are no two ways about it. But numbers will be very, very interesting for this quarter, which is expected to be the strongest quarter for insurance players. Yeah, so as a sector, yes, I think the potential still holds out from a medium to long-term perspective.
Okay. Just Nifty Bank now lying absolutely flat. RBL Bank, for one process clarification, is doing okay for itself. Amar Singh, a quick chart check on an RBL Bank, which is up 9% today after a 22% drop on Monday.
Yeah, looking at RBL Bank, what we are seeing is that the stock definitely has bounced back and also taken crucial support. But technically, I would say that the stock, till the time we don't see the stock trading consistently above 248, 250 odd levels, the stock would meet with selling pressure. But yes, it seems that the stock definitely has formed a bottom. So the range between 200 and 250 is going to be the range for Yes Bank, for RBL Bank. So one can look at that from a trading perspective. But overall, the short-term trend still remains down. Okay,
that's RBL Bank. Overall short-term trend, according to Amar Singh, is still lower. Varun Beverages today is up about 6%. Nonetheless, the stock has come off quite significantly. I think it was closer to 820 odd, from which it fell lower, and today's session is up about 6% odd. Would you be a buyer here, Manav Chopra?
Devina, can you please repeat
Varun
this
Beverages. Varun Beverages.
Sure. In fact, the stock has seen a good bounce back today from the important support, and it has formed a morning star pattern. The overall structure definitely remains quite positive, and this is one stock that one can still look to buy this in a phased manner even at the current level. So on the lower side, 745 to 750 will be the important support zone, and I believe in the medium term perspective the stock is quite well poised to even retest the levels of 840 to 850. So this stock should not be bought for a short term trading, but one should actually have a medium term to long term perspective. The overall structure is quite bullish, so once if it breaks 850 on the upside, we could see much higher levels going forward.
Okay, Mayuresh, a question that has come in, and tempted to ask that simply because there's so much of opinion wanted around the pharma companies. What's the view on companies, the API players, Divi's, Solara, etc.? There's somebody who's wanting to know if there is merit in participating in the buyback of granules. Do you have coverage there?
No, so largely, Neeraj, again, I think these companies will continue doing well, because I think the supported base that they've probably got for their core API modules respectively, I think will hold them in true good. So I think Divi's has got two leadership APIs, and basically I think the cough suppressant and the pain suppressant is doing exceedingly well in the terms of market share gains that it has. Granules, again, I think the leadership position that they probably have in a lot of APIs at this point of time, including metmorphin, I think that probably should also hold good from an earnings perspective. So I think the objective is from a risk reward perspective, right? And if the risk reward is there from a medium to longer term, I think these companies will be able to deliver. So yeah, I think there is no recommendation per se, at least at this point of time, but yes, anybody holding on should continue holding on to these stocks.
Okay, gentlemen. Mayuresh, leave it at that. Thank you so much for taking the time out and being with us today. Manav, Amar, if you can stay on, we'll just take in closing thoughts from you. But here's how the markets are shutting shop. Absolutely flat. Now, you could argue both ways that we are not ending in the red, which is a great thing, because the last few days we made a habit of doing that. But we are off from the highs of the day as well. So that's a bit of a negative that we have in the markets today. The mid cap and the small cap indices too participated today briefly, but the mid caps ending with a percent cut, which is probably not the best of outcomes. But let's wait and watch if tomorrow changes. What's done well? Yes Bank is a massive 37% uptick. There is strength in Z, Bharti Infra about 6%, Coal India, Hero MotoCorp, and Reliance bounces back. Though HUL2 is the other one which has done reasonably okay. What's not done well? GAIL is down 10%, the top loser on that Morgan Stanley note. There is weakness in Tata Steel, Tata Motors, IndusInd Bank, and BPCL. And SBI and Vedanta too have corrected a bit in the session today. But sub 100 for Vedanta, sub 100 for Tata Motors, sub 100 for GAIL. Those are heavyweight stocks which are all now in double digits. Navneet, what about the broader end of the spectrum?
Well, Neeraj, I think the losses were restricted today, but still, you've got markets coming off the day's high, off the day's low as well. It's just a flat closing I think we're staring at. But for the Nifty Mid-Cap Index, it was not a great session. As you can see on your screen, the Mid-Cap Index actually underperformed quite sharply. It's closing with cuts of about 1%. Let me still begin with a couple of gainers, as we've been highlighting how Pidilite has been bucking the trend in this weak environment. The stock touched its live high levels. Even at current levels, you had traders taking long positions on the future side, and it also crossed the mark of 1700 today. ICICI Prudential also bounced back in today's trade. This one saw some gains, so 3.5% up for this one. And HDFC AMC. So all these quality stocks which were moving higher, had corrected due to market weakness, are seeing some signs of bouncing back now. HDFC AMC was up about 2.5%. Dilip Bilkon, in last 45 minutes of trade, you saw the stock actually it's closing at upper circuit with gains of 20%. All the buying came in the last 40 to 45 minutes of trade. And then you got IRB Infra, which was up and about. Also, it's a weak counter which has stumbled about 50 to 60% in last 1 year. RBL Bank, after it gave clarification to the exchanges that they are well capitalized, after falling 20% on Monday, the stock surged 10% today. On the losing side, Apollo Tyres, right from the word go, was weak, so that's down about 9%. Then you had India Bulls Housing, high beta counters once again under pressure. Look at that, in last 45 minutes of trade, it gave up all its gains. Indigo was the other one which was down in today's session, down 4%. Berger Paints, and among the PSU banking lot, Nifty PSU banking index, by the way, was down 3.5%. You had Bank of Baroda in the last 15 to 20 minutes of trade, fell by almost closer to 6%.
We're still about 45 seconds left to go for market closing. Looks like you're going to have a very flat close for today. So 10,452, not managing to hold on to levels of above 10,500, which would probably been a better sentimental booster if you would manage to scale this levels, but not so. And the mid-cap index seems to be a little bit of a disappointment in today's session. The breadth of the market, I don't think that'll change much. That's the mid-cap closing down about 1% and a third of a percent under from the small-cap index. The breadth of the market, that's still in favor of the declines. 661 stocks advancing versus 898 stocks declining.
Okay, and lastly, just take a look at the participation as well, how that has panned out. Pull up the market turnover. Remember, last 2 days, the cash turnover has been on the higher side. It's less than Monday, but still it's above the average that we've seen, closer to 50,000 for NSE, and F&O turnover closer to 14 lakh crore.
So that's as far as the Indian markets go. But amidst growing concerns over the uncertainty over the spread of coronavirus, the Bank of England has unanimously cut interest rates by 50 basis points. Anna Edwards from Bloomberg News joins us right now with more details. Anna, what is the Bank of England saying and what are the primary concerns?
Yeah, good morning to you from London. So we were here in Westminster because we were already expecting to hear from the government today how it wanted to shore up the UK economy in the face of the uncertainty and the hit that is expected to come from coronavirus. And instead, we were surprised in the early hours by a Bank of England interest rate cut. 50 basis points was the extent of the cut, so a surprise cut, an outsized, bigger than normal cut, coming outside the normal sequence of interest rate meetings. So this did surprise the market. We saw some initial reaction in the pound. The pound went lower, but then recovered. We also see this decision adding some support to European equities as it really prompts further discussion at the extent to which monetary authorities globally are going to come forward and support the global economy. The Bank of England describing this as a really big deal, and there isn't just the rate cut in here. There's also a lending scheme to small and medium-sized businesses over some 4 years. They say that they've learned from previous lending schemes that these tactics really do work. They're very effective. They're very well used by small and medium-sized businesses. And there's also a cut to what they call the cyclical buffer, the counter-cyclical buffer, which means that there are a number of incentives here for banks to continue to lend and increase their lending to small and medium-sized businesses through what is going to be a tough time. A short and temporary shock to the UK economy is the way that the Bank of England describes it. But this is the way that they are choosing to set up with some cooperation with fiscal authorities this coming on the day that we are expecting this budget announcement. And certainly the Bank of England underlining the way that this is being done in cooperation with the government. And so we look to early afternoon London time for some announcements from the government in their budget about the targeted fiscal measures that will also help to consolidate what the Bank of England has already done here.
Well, it's interesting, Anna, and some of the words from the other central bankers are also sounding very, very similar. Thank you so much for speaking to us today. Well, that's the view about the Bank of England decision as well. But I must say, while all of that has happened, what we've done is, as we said, end absolutely flat. If our technical experts are still with us, we'll just take in a quick closing thought from both of them as well. But I'll come to you first. Based on what we've done today, how do you anticipate tomorrow or the next couple of days to be like?
See, the markets have witnessed selling pressure from the day's highs, both on the Nifty and the Bank Nifty, and the Friday's lows also observed a very strong buying. So it clearly is quite evident that the volatility is happening on both the sides. Today's highs on both the indices would be the important pivot points for the markets to move higher. So for the Nifty, if we break 10,550, and for the Bank Nifty, it would be 26,700 to 26,800 levels. So these are the crucial levels on the upside that one can look out for. So once if both the indices starts breaking these zones, we could expect a short-term pullback rally coming to the markets, where the short-term traders can take this opportunity for playing a contra move with the respective stop losses. So even at the current zone, looking at the overall PCR ratio and everything, I sense looking at the volatility, one needs to not be quite aggressive shorts at the markets, but look for opportunities to take buying trades on the upside.
Amar, what about you?
Yeah, I would say that Nifty and Bank Nifty both are at very crucial support zones, and technically if you look at the trend definitely remains down, but there is a possibility of a short covering and also some buying coming in. So Nifty, the level to watch out is 10,550, 10,600 zone. That's going to act as a very crucial resistance zone. Yes, if that is taken out, then we could see a spike towards 10,700, 750 levels.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. But, we end on a flat note. It's a wrap on this leg of Countdown from Navneet, Devina and me and the entire team that put this show together. Thanks so much for watching. Stay tuned. The Market Wrap comes up next.